And therefore, it is extremely important that I become selfish in my approach to my investments. So that's my first bit of gyan to everybody as far as investments go. Control the controllable and let what you can't do come in the way of what you can do. So if I had to take that further to say what really, as far as investments goes, makes wealth, it's a very simple thing in life to make wealth. Huh? It's a very, very simple process. Save some amount of money every good frequency, whether it is every year, every 6 months, every quarter, or every month. Invest in time, allow it to, grow over a period of time. The power of compounding is what works for you and your money, and wealth creation happens. It's just like having children. You cannot have a child who is going to kindergarten and say, nahi, nahi, aaj hi 10वीं की pariksha de ke finish your 10th standard today itself, right? You have to go through that journey of learning each subject and then giving those milestone examinations. Same is with wealth creation. However, again, in our human behavior, we'd like to cut short this time, or we'd like to cut short this compounding, which happens over time to a very short period of time. The only thing we lack is discipline. Mind you, we don't lack the money because you need very little money to become wealthy. You don't need more time. You have the time. Power of compounding in markets will work for you. All we do, and second gyan that I can give everybody is what we lack is the discipline to allow this to happen for us. And in that journey of that real long-term wealth creation, what are the areas or aspects of investment that I focus on in my investment portfolio? Are probably these four or few more, but I'd highlight these four very important factors. Okay. So the first important factor is asset allocation. Now, everybody understands that, you have multiple asset classes. So there is equities, there is fixed income or debt or bonds or fixed deposits, there is gold, there is real estate. And then in each asset class, you will have multiple types of assets. So if you talk about equity, you have got Indian equity, you've got foreign equity. You have got a large cap, mid cap, small cap. If you talk about bonds, you want to buy a really 10-year bond, or you want to buy a bank fixed deposit. You want to buy a government of India bond, or you want to buy a corporate bond. If you talk about real estate outside of the house that you live in, whether you want to buy another house and give it on rent, or whether you want to buy a shop or an industrial gala, if it is, gold, do you want to buy a ETF or a paper, or do you want to buy ornaments so you can use them in that journey? In every asset class, there are multiple choices. But trust me when I'm saying this, wealth is created only if you got your asset class and allocation correct. And the reason that it is that the biggest mistake that we make as investors is we chase returns. So anything that does well, we read about it and then we want to go there and jump into it. Arey bhai, but it was the time to invest when it was not doing well. There is no point in chasing returns after they have been delivered. And because you will never know where the next returns are going to come from, because winners rotate, it is important you have money in different asset classes. equity, commodity, crypto, debt, cash, real estate. How much you should allocate to each of these buckets is very individualistic. It is not a set formula. There are many people who will tell you the thumb rule is 100 minus your age should be equal to how much money you should have into equity markets. Well, that's a good broad guidance.
Sir, I would just like to pause. Your face is not visible due to background, I think.
No, that's probably because my uh, slide is on, or
No, because maybe sometimes that background is on the background. Now it's slightly hazy.
okay, because of the background. Okay, I get it. I get it.
Now it's
Yeah.
better. Now it's better. It's visible.
Maybe I just move closer to the screen. Is this fine?
Perfect. Fine, sir. 100%.
Okay. So, often people ask me, should I invest in gold? My answer is always yes. Should I invest in debt? Yes. Should I have money in a savings bank? Of course, you must have, because, how else will you provide liquidity for whether it's daily expenses or an emergency? Should you have real estate? The answer is yes. The question is always about how much, and that is a very individualistic answer. Okay. Because if I am Pesi and I'm living in Mumbai and I've got a house in Mumbai, which costs me crores and crores and crores of rupees, I may not have enough money because there's so much money that I've already invested in real estate for consumption. I don't have too much money to be able to put in debt, because I have to grow my capital and I will put all my money in equity. And that's what makes the difference. But the important thing to remember is that winners rotate, and therefore do not chase returns, but chase the right asset allocation by being selfish what works for you. And here is a simple chart which tells you how winners rotate. So in the last 17 years, and this is only data till 20, but I can keep on adding years to it. In these 17 years, 9 times equity was the best performing asset class. 6 times it was gold. And there were certain years where things were so bad in terms of high inflation that actually inflation was the best performer. If I come to global markets, we as Indians believe I Indian, be Indian, buy Indian, and in our investments also, we only buy Indian investments. India is a great growth story. The markets have delivered well. But again, take a look at the last 12 years ending in 2020. India actually was the best performing market only 4 out of 12 years. US was there 6 out of 12 times. And China was the best performing in 2 years. So who will be the next best performing market? Uh, is just impossible to predict. But if I have dollar aspirations in life, and let me explain what I mean by that. So if I see my children growing up and I say, मुझे पता नहीं मेरी बेटी बड़ी होगी, and at that time she will want to go and pursue education outside of India, and it's a dream that I'll have to fulfill in US dollars, then you better start building assets in US dollars. And because interest rates are very low over there, I will hedge my currency risk and I will buy an asset class which is going to grow. And that's going to be global, international, or US equities. That is where I again come repeatedly to say, be selfish. Don't buy US equity because Apple, Facebook, and Netflix are doing good. So are companies in India. Buy because you have a need beyond just chasing returns. Within Indian equity, take a look at this. In the last 11 years ending 2020, mid cap did the best 3 times. Large cap was the best performing segment 4 out of 11 times. And small cap was the best performing 4 out of 11 times. So again, people ask me, Pacey, should in this environment, should we be large in, I mean, or should we allocate more to large cap, or should I allocate more to mid cap or small cap? Is this very expensive? And I'm like, how in the world are you going to ever keep doing this repeatedly, year after year, 6 months after 6 months, in terms of chasing returns? You will never be able to do it. And therefore, in my equity portfolio, I am very clear that I need to be a risk taker. So I have got a 40% approximately large cap allocation. I have a 40% small cap allocation, and I've got a 10% mid cap and a 10% allocated for special thematic plays like sectoral funds and all of that. And I don't know where the market will go. I don't know which will be the best performing sector or capitalization segment, but I know that winners will rotate. And therefore, I've got my money spread out correctly to my selfishly my investment needs, and rest will take care of itself. So the first investment mantra that I want to leave with you is asset allocation. Please pay absolute importance to it and diversify across asset classes, geographies, market capitalization, and within each asset class, different asset types that you get. Who should decide how much? An advisor can guide you towards it, but be led by your need. Don't be led by return potential alone. That's the big message that I'd like to give you. The second investment mantra I will leave with you is, you know, I'm often asked this question, which says, ab kare ya kab? And it's always about how can I time the market for an entry or an exit? Well, let me be honest. No one, okay, no one has ever got it right repeatedly. You may have got it right once, you may have got it right twice, but if that person had got it right repeatedly, he should have been bigger than Mukesh Ambani. Okay. So don't waste your time in trying to guess timing the market. And here is why. Let me explain how wealth is truly created. This is the Nifty, very simple index of the market. Over a 25-year period, the Nifty Mota Mota gave a return of 12%. Wonderful. 7 years, it was negative. 18 years, it gave you positive return. Now, how the hell can you predict and tell me in the next 25 years, which are going to be those positive years and which are going to be those negative years? The range of negative returns was -1 to -52%. That 52% negative was in 2008 when you had the global financial crisis. And the positive returns were 3 to 76%. That 76% came immediately in the year following the global financial crisis. Is it a reasonable return for a reasonably long period of time? The answer is yes. In this journey, take a look at this. Sorry, it's quite busy, but focus on the chart or the table on the left-hand side. In the 25-year period, if you did nothing, if you just stayed invested, आपने पैसा लगाया और बैठ गए, आपका लगभग 12% रिटर्न छूटा. 1 lakh invested would have become about 14.64 lakhs. But then there are good days in the market and bad days, not bad periods, not bad years, not bad months. There are just good and bad days. And if you miss the 5 best days in a 25-year period, your return fell from 11.3 to 9.1%. Instead of 14 lakhs, you landed up with 8 lakhs. If you missed the 10 best days, your 14 lakhs became 6 lakhs. And if you missed 40 days in a 25-year period, think of it. If you missed 40 days, your return is practically zero. Now, if any investor can tell me that in the next 25 years, which are going to be the best 40 days, I will invest just one day prior to those 40 days. And what I've listed right next to it is the 10 best days in the market and the 10 worst days in the market. And please remember, to make money, you have to capture the best 10 days. And you have to also make sure you exited the market one day prior than the 10 worst days. We had the pandemic hit us. It gave you one of the worst trading days that we have seen in the last 25 years. On 23rd of March 2020, the market fell 12.98%. One day you lost 13% of your value. Okay. Um, but and that came on the back of, if you see, on 12th of March versus 23rd of March, on 12th of March, you had already lost 8% value. So between 12th of March and 23rd of March, you lost practically 20% of market drop in a matter of 8 days. But the year 2020 gave positive returns. So the point I'm trying to make is that it is an absolutely futile, useless waste of your time in trying to time the market in terms of entry and exit. No one has ever got it right. If you did by luck or skill, to get it right repeatedly is an impossible task. And therefore, time in the market is what you need to focus, because that's the only way you will really make wealth. Time versus timing being the second mantra. The third mantra that I'd like to leave on the table is inflation. Okay. You know, and this is a time in which inflation is discussed heavily. You know, we keep talking about, oh, CPI is this, WPI is this, core inflation is this, petrol ka bhav ye ho gaya. And inflation essentially made all of these coins useless to you today, because you can't buy anything. These coins are not even available in circulation anymore, because if they were, it is legal tender. But on its own, none of these coins will buy you anything on its own. Okay, because they lost purchasing power that you had, and everyone understands inflation and inflation dynamics. But you know, in even my household, I discuss inflation with my family, but never about the price of goods and commodities. So my wife will come and say, oh, you know, the maid wants 2,000 rupees extra salary. I said, okay. Oh, you know, the dhobi came and he was taking 6 rupees for ironing a shirt. Now he wants 7 rupees for ironing a shirt. Oh, you have no idea. Come to me with the bazaar. Every time I withdraw money, you ask me where it's gone. Look at the price of tomatoes and look at the price of onions, and, you know, see how expensive mutton and chicken has become. I said, okay. And in my wife's dictionary, this is inflation. In my dictionary, inflation has nothing to do with the price of goods, commodities, and services. The true inflation in your life is actually in your lifestyle. And if you can control that inflation, you will become wealthy. And again, I'll give you my own personal example. You know, I got married in the year 1999. And before marriage, you know, itself, I had bought my first house. It was a one bedroom, 430 square feet for a princely sum of 11 lakhs of rupees. Okay. The day I got married, went on honeymoon, came back, and my wife and myself started living in that house. And then in the journey from 1999 to 2022, we moved from a one bedroom apartment to a two bedroom apartment, from a two bedroom apartment to a four bedroom apartment. God has been kind. In that one bedroom apartment, The first air conditioner we had was a wedding gift that a friend gave me. In this 4-bedroom apartment, we now have 6 air conditioners. We just returned 2 weeks back from a holiday in Switzerland. God has been kind that He has provided me opportunities that I can provide this to my family. But in all honesty, I keep telling my wife, inflation is in our lifestyle. And I have never preached or professed that you should not spend the hard earned money that you have on yourself. Of course, you must. The only thing I profess is don't do that at the cost of investing. Do not ever prioritize lifestyle before investing. Make lifestyle an outcome of the good investing that you did. And in today's young first time jobbers or investors, the biggest worry about them that I have is that they will live a rich life, but they will never become wealthy. And the reason I say that is because the aspiration or the need to fulfill aspirations today and now in lifestyle is become so strong that it puts investments on a lower priority, and that will make sure you never become wealthy. So my true gyan about inflation, and next time when you look at everything in the newspapers and in your households and you talk about inflation, just look at your electricity bill, and that is lifestyle inflation. Okay. uh, and segregate prices and your acts, and that's where what is within your control is your lifestyle inflation. Don't worry about the price of goods and commodities. The fourth mantra that I will leave with you is the power of compounding. We all want to become rich overnight, but that ain't happening unless you have got the luck of the devil and you keep buying a lottery and it hits you. But otherwise, uh, everyone knows this man is very simple thing. He said, compound interest is the eighth wonder of the world, and compound interest can happen only over a period of time. But he who doesn't know it or understand it pays it. He who understands it earns it. And when I started my first job, one of the first typical, if you are from a Indian lower middle class household, the first thing that my grandmother taught me was you have to save better. So from my first salary of 3,000 rupees, I still remember I used to put 1,000 rupees away. 33% used to go away. And what did I start doing? I started doing fixed deposits and I did PPF. And I have no problem with PPF. I like that product very much for the two reasons: that one, it is government guaranteed, and second is that it gives you great compounding. तुम्हारा पैसा दबा के रखता है 15 साल के लिए, and there is an annual compounding on it. मेरी गलती इतनी थी कि जो पीपीएफ में डिसिप्लिन के साथ हर साल डालता था, एंड आई अलाउड दैट मनी टू ग्रो विद कंपाउंडिंग, वो टाइम पे मुझे किसी ने म्यूचुअल फंड के बारे में नहीं सिखाया, इक्विटी मार्केट में जाने के लिए डर लगता था. And therefore, had I done an SIP of the 1,000 rupees starting way back in 1994, I would probably not be working today. I would still be doing what I'm doing because I love what I do, but I wouldn't be working for any employer. And that is the power of compounding. Take an example of this game. Think of this number. If your child came to you and say, daddy, give me pocket money, 1 rupee on day one of the month, 2 rupees on the second day, daddy, third day, give me 4 rupees, daddy, fifth day, give me 8 rupees, daddy, sixth day, give me 16 rupees, and seventh day, give me 32 rupees. And like that, daddy, please, for 1 month only continue doubling my pocket money every day, only 1 month. What is the power of compounding? Now, this is very hypothetical, but the answer is 1 rupee compounded to double every day for a month will give you a 107 crore rupees in 31 days. हकीकत में ये होता नहीं है. Money is made over a period of time. Like you saw, the Nifty returns of 25 years is 12%, and 12% is fantastic compounding for you to make money. We disrupt our compounding because of market timing. And this is what causes disruptions in you being selfish, and therefore you never become wealthy. Take this example. I'm going to use a fund called UTI FlexiCap Fund, and I'm only using it as an example to display here. But think of someone who starts investing at the market bottom, okay? Or rather, you started investing just before a market, the markets are going up. And this I'm giving before the global financial crisis example. I started investing in November 2005. I started an SIP of 10,000 rupees. In 3 years, by November 2008, I would have put in 3,60,000 rupees. The crisis hits. From 3,60,000, I'm now left with 2,86,000. The fund has dropped by 15%. The question that everyone will ask is, what should I do? Buy, hold, or sell? And if you forgot about the market and you just said, "Nee, nee, hold on, I am saving for Sanaya and Shazan, and they don't have any need today. Why am I timing the market?" And I continued for another 2 years, the 6 lakhs that I would have put in monthly installments of 10,000 would suddenly look like a 21% return in 10 lakhs of rupees. And if again I continued that journey for another 10 years and COVID pandemic hit, and again I lose value, my 17 lakh 30 invested by then became only 34 lakhs. My 21% return, जो 10 साल पहले दिख रहा था, became half of 9%. And if I just did nothing, I remained focused on being selfish. Look at how that 1 year changed. 34 lakhs became 70 lakhs, 9% return became 15% return now over a period of 16 years by being selfish. You cannot make money by trying to time the market. Time in the market is where money will be made. And take the same example, even more recent times, not 16-year journey. If I started my investment journey in April 2017 with 10,000 rupees a month, and I was hit with the pandemic, I would have lost 60,000 out of 3,60,000 rupees. But if I just stayed continued, and this is only data till June 21, apologies that it's not updated, but it doesn't matter. A 5 lakh invested suddenly looked like 8 lakhs of rupees. It's time you will spend in the market by being selfish for what your goals are that will decide whether you will or will not become wealthy, not the timing of the market. And does this apply in short-term periods or does it apply in long-term periods? Take a look at again the same FlexiCap example. When I say it requires investment discipline of regular investments over long periods of time, 25,000 rupees per month, 3 lakhs in a year, invested for 15 years means 45 lakhs put in. If you did it in the Nifty, you are making 1.25 crores today. If you did it in FlexiCap fund, you would have made 1.71 crores today. What you needed to do was start with 25,000 rupees and continue doing that every month to achieve 1.8 crores in a period of 15 years. All it needs is small sums of money, long periods of time, allow the power of compounding to play out for you. And in that journey, life is not the same, because if in 2006 you could put whether it was 2000 or 25,000, if you could add every year, because you earn, you improve yourself, right? Your earning potential. That same example, if I continue, what was 1.71 crores, if you could step up your investment by 5,000 rupees every year from the 14th year, 13th year, 12th year back, you could step up by 5,000 every year which is your monthly installment, you would have invested an amount of 1 crore in this 15-year journey. The value you would be sitting on is 3.35 crores. This, my dear friends, is what I call prioritizing investments over lifestyle or aspirations, your holidays, or making the next purchase. Never ever give up on your investment path to fund a aspiration that you have today. Fulfill all your wants and needs, but never at the cost of making this investment, because this is the only way to truly make money or wealth. And do not allow anything in the world to disrupt this program or plan of yours. I'll close the next few slides by just putting out very simple thing, how this works. It's very simple. You take a small amount of 2,000, 5,000 or 10,000. If you are going to earn a return of 12% over 10 years, uh, 2,000 will give you a 4,64,000 rupee outcome. A 10,000 will give you a 23 lakh rupee outcome. All the point I would like to make is, so many people believe that, oh, I should put 2,000 rupees, but 10 साल में मेरे लिए BMW गाड़ी आनी चाहिए. नहीं भैया, आप 1,000 रुपया डालोगे तो you will get a Luna or a bike. You will not get a BMW car. You have aspirations of a BMW car, then you start giving up buying the latest phone today. By investing slightly higher, you will reach your BMW dream. But do not expect to put 2,000 rupees and say, oh, it will fund my Swiss holiday. It ain't going to happen. Because it is only about the value that you put, the time that you give. So instead of 10 years, you gave it 20 years. This is the outcome, how it changes. It's the time that you give and the power of compounding which will lead to the outcome that you are seeking. So I'll close by saying you need to start early. You need to invest regularly. You need to top it up. And you need to exit your investments when you have the need for money. You don't exit investments because of markets. You have a plan, you stay and stick to your plan. The return difference between what an investor gets and what the market gives is not decided by the market. It is decided by the investor, and that is on account of the behavior that you display. That behavior gap is what is caused because of greed and fear. And if you can control that and stay focused on your priorities in life, you will make market and better than market returns. So that's where I'm going to stop, Saurabh. Big appreciation to everyone for your patient listening. And all I can tell you again out of experience is that the best time to implement these simple principles was yesterday. The next best time is actually today. Thanks, and over to you, Saurabh.
Perfect. Thank you, sir. Thank you for that very short, crisp, and I would say very meaningful presentation. I would again like to, say one thing, that today we were almost full house, had a capacity of 100. We reached 100, and I was just getting WhatsApp that, they are not able to join, so I have to make it live on YouTube. So thank you, sir, for taking your time out and, enlightening all of us in terms of maybe what things we should do. Most of us are doing, most of us are investing, but sometimes we need a little bit of push and motivation, maybe, from somebody who is more experienced in terms of how one should do that and how should one take things up. So now we are open to question, friends. Whatever questions you have, please unmute and you can ask. Please go ahead, or you can put it in the chat box. So we had one question, like, Pesi, somebody is asking, like, 3 crores look large amount today, but 15 years from now, it may not be that big amount due to inflation. So he just wanted to understand whether, what is wrong probably, or maybe is it correct the way he's thinking in that line?
Oh, absolutely. And again, I'll repeat, don't worry about 3 crores being small amount in future. You have to worry about, and like I keep saying, your aspirations in the future, which 3 crores will not fund. So, let me give an example, Saurabh. In my own personal example, right? I said I started my journey with a house of, 11 lakhs of rupees. Today, even if I had a budget, of, let's say 7 crores, I cannot buy the house that I'm living in. I was just lucky that I bought it when I bought it. Okay. So, uh, 3 crores, will it be meaningful money in future? The answer is yes, it will be meaningful money. But there will be a lot many aspirations that will eat up this 3 crores before you realize. That is what you have to worry about. आज 3 crore में तू गाड़ी ले सकता है, and you will not get top of the you will not be like the car of the country. You will just have one of the many other cars that are going around in this country. So that's my only point. Ke, uh, inflation in lifestyle, watch for that one. 3 crores might be even less even today. Forget the future.
Perfect. Arvind, you have one question. Please, you can unmute. Yeah, Arvind, you have raised hands. Okay, Prashant, you have a question. Please, Prashant, you can unmute.
Hey Saurabh, hi PC. Thanks for conducting this one. I just have a quick question. So, is this a good idea to remain invested in equity, or is this a good idea to remain invested in mutual funds, or both? Because in equity, we'll have to get it averaged whenever the market is down. But in mutual funds, I think we don't need to bother about that. But yes, so which one is a best option to remain
Prashant, how
invested?
old are you?
I'm 33 years old.
How many kids do you have?
I have one kid of 2.5 year old.
Why are you investing?
To make her future and our future bright.
Perfect. अभी 2.5 साल की उम्र में तेरे पास लगभग 16 साल है या 18 साल है before her future. You have to big funding do it for her education and whatever, right?
Yeah.
18 साल में what market returns will you get? Can you imagine what is the power of compounding that will play out for you? Prashant, I wish I was 33. I
Okay.
wish my daughter was 2 years old only, and I
Yeah.
wish I had the luxury of time. But I also wish that I had my today's salary
Mm-hmm.
at that point of time. Okay,
Mm-hmm.
uh, because all I can tell you, Prashant, is stay focused on your daughter. Don't stay focused on the markets. Okay.
Okay.
Um, don't try to say मुझे एवरेज करना है, तुझे इक्विटी करने का पसंद है, कर इक्विटी ना, बट जो
Mm-hmm.
तुझे समझ में आता है वो कर. Okay.
Mm-hmm. Mm-hmm. Mm-hmm.
If you are tracking a company and you believe in the future of that company and you think it's a great growth story, it's a compounder over the next life of
Mm-hmm.
15, 18 years, good. Buy that company. When the stock price falls, you want to buy some more, good. Stay invested in the markets. Don't try to worry about saying कि अब मैं म्यूचुअल फंड करूं या नहीं करूं, इक्विटी करूं नहीं करूं. I think for a young guy like you with a just 2-year-old kid, equity is the asset class that will make real compounding wealth for you. So,
Yes. Yes. Yeah. I
so
already
buy
invested.
mutual funds, buy equities, and keep buying them, and just stay invested. That's it.
So
Yeah.
basically, what Prashant was checking basically how should his allocation be between mutual funds and equity? Because now everybody, wanted to, they have a flair that, they wanted to invest directly into equities. Abhi SIP chal raha hai, chalo theek hai. So now how one should, balance that out?
Yeah.
So,
Correct.
so I'd say, Prashant, what do you do as a profession, job?
So
You
I'm a manager in one of the MNC now.
Fantastic. Okay. Now you have a 9 to 5, 9 to 9 job. Okay.
You're
If you're
right.
working in an MNC, they would be expecting that you will put concentrated 8, 10, 12 hours a day. Okay, in the week. Where is the
Right.
time to track equity on your own? So good, but you like to do it as a passion. Do it as a passion. Don't make the passion the mainstay of your investment
Mm-hmm.
path. To that
Mm-hmm.
end, I'd say a large part of your portfolio should go into mutual funds, which are properly, perfectly managed, and fulfill your passion also to whatever else little that you can do on the side. I'd say don't put more than probably 10% of your portfolio in direct equities and put 90% into mutual funds is what I would do if I was 33 years old, which I was at one time. And at that time, my daughter was 2 years of age. Yep.
Thank you so much. And last one question. I know that there are some comments even saying the same question. So what is your view on crypto? I did invest in crypto, say more than 10 lakhs, in cryptos. So now it has
Wow.
been reduced to almost 60 to 70%. Everything is hammered down. So what's your view or take, crypto?
So honestly, I don't understand crypto. Okay. I do understand some simple logic of, there being, firstly, understand, don't confuse crypto and blockchain. Blockchain is technology, and crypto is something that is sitting on top of that technology. Secondly, is that, somebody came with a brilliant idea after 2008 global financial crisis and said, we are always dependent upon these governments to create and manage currencies. And what if we had a world in which uh, we created our own trading, commodity. Currency is a commodity, right? It helps you to trade between two different products.
Yes.
So someone created this thing called, crypto and said, listen, I will create only X number of this commodity. And therefore, if you want to use it, you can use it for trading between each other on multiple things. So think of it as not a dollar, but crypto. Now, what what I don't understand is, two, three things about it. One, it's only a medium of exchange. Now you made that medium of exchange a thing that you have become investing in. Rupee is a medium of exchange. Dollar is a medium of exchange. It's like buying dollar, buying rupee, or buying a cryptocurrency, which has been used over there. Secondly, the balloon of valuation came from the shortage in supply that you declared in advance. So you said, I will only mint so many of this cryptocurrency. And because people said, oh, ye itna hi hai, to mujhe bhi chahiye, mujhe bhi chahiye. The third, this was a big beneficiary of very loose monetary policy that followed 2008 global financial crisis and very low interest rates that existed at that point of time. So it's helicopter money. There's so much money that is available to people. You don't know what to do. So you said, "Arey, sala, एक चीज $10 की अब 1000 हो गई है. मैं कूद पड़ता हूँ 1000 का 10,000 हो गया कोई और टूट पड़ा and everybody has a lot of free money available at that point of time and where it's gone. Do I believe it's an asset class? Uh, Honestly, I don't. Okay.
Okay.
I get scared about it because it's completely unregulated. Please go on Netflix and watch. There is a very good documentary that was released, sometime back. There are two or three of them on crypto, but one which talks about the disappearance of a crypto exchange and how people lost millions and millions and millions of dollars, because वो exchange ही गायब हो गया. Okay, so वो exchange में किसी का crypto पड़ा था, किसी का cash पड़ा था, and दोनों side गायब हो गया. So what I don't like is that it's unregulated, it is private market, it is built on scarcity, and it is funded by abundant liquidity, low interest rates, and poor regulation.
Got it. Got it. Thank
Okay.
you, Basit. Thanks for, all your valuable suggestions. Yeah. Thank you so much, Saurabh.
Very well explained on that crypto part. So moving on to next question, I'll take one from the Q&A and one from the participants. So Nilesh is asking one question: rather than looking at the returns, large cap, mid cap, what they give every year, shouldn't we look at these over the years and then decide asset allocation, or how we should do that?
I will again go back to saying where I started from. Be
Yeah.
selfish.
Selfish.
Don't let returns decide your investment strategy. Yeah. Let sleeplessness decide your investment strategy. So if I say I am an individual ki sala, agar mera investment 25%, think of what I showed in that slide, Saurabh. On the 2 days of March in 2020, the market lost 20%. One day it fell 8%, and another day it fell 13%. If I get sleepless nights when something like that happens, then should I be in equity? How much should I be in equity? That should be the question. Within equity, will mid cap and small cap be more volatile than large cap? The answer is absolutely yes. So मुझे जितना हजम होता है ना, थाली में आप उतना ही परोसो. That's the point that one has to look at. There is no perfect formula that can be applied to this.
Shailendra, yeah, you can unmute. Please go ahead with your question.
Yeah, hi. First of all, thank you so much, Saurabh, for arranging all these things. I have one very small question. Basically, I am 42 years old and having two daughters of 4 and 10 years. I have invested in PPF for me and both daughters, along with SSY, and I have also invested in mutual funds as SIP of around 5K per month. Can you please suggest what else I can do to secure my daughter's career and marriage?
शैलेंद्र, एक ही जवाब दूंगा, आपका सिप रकम प्लीज बढ़ाइए.
Okay.
If you think you have going to secure your children's future with only 5,000 rupees a month in an asset class which is going to compound at maybe 12, 13, 14% in the future, you are under allocating to that asset class which is equities. And the way to what you're doing is absolutely perfect. I don't have a problem with PPF. I think it's a great product. Do invest in it. Okay. The way you are going to invest in PPF for 15 years, okay, is the same way. But PPF में आप कितना डालते हो हर साल? 2 बेटी के लिए 1.5 लाख भी डाला तो 3 लाख डालते हो ना?
Yes, right? Sir. Plus 1.5 in SSY also.
That's 4.5 lakhs. But यहाँ पर आप महीने का 5,000 रुपया डाल रहे हो. So what I'm trying to explain to you is an asset class that has got the highest earning potential, and you are a disciplined guy ready to put money for the long term, as you are doing in SSY as in PPF. But you are putting the least amount of money in the asset class that has got the greatest earning potential over the long term. And you are a long-term investor because you're putting money for PPF and SSY. So my only gyan to you would be, जितना आप अपना बेल्ट टाइट करके पैसा निकाल के निवेश कर सकते हो, प्लीज एसआईपी में यहाँ से आगे सिर्फ एसआईपी पे फोकस कीजिए.
So what sir, NPS में भी मैं 50,000 डालता हूँ sir. Sorry sir.
Great, because this is again a long-term, low-cost access to. I don't know which plan in NPS you have, but I'm assuming that it's not a government securities plan. But I think you need to focus on asset classes like equity that will create wealth after beating inflation. So please focus on that.
So like considering his age, Pesci 42 years, like, currently his 80% is going into fixed income. So what, according to you, should be his ideal asset allocation minimum? Ki bhai chalo 40% equity or 30%, 50%, what would you advise him?
I would have said 80% of his money should have been in equities. But what I don't know, Saurabh, is Shailendra's financial position. I don't know his liabilities. I don't know his commitments towards...
sir, I can invest around 50,000 per month.
Additionally?
Yes, sir.
Great. All 50,000 should go into equities, and all 50,000 you need to do SIPs. End of story.
Okay, sir.
I mean, it will not take me even 3 seconds to give you that advice. And I am confident when I'm giving this to you, when you're telling me that you can do it, I can tell you, Shailendra, meet me after, call me for your daughter's marriage. We would have funded it only from these SIPs. Call me for your daughter's graduation. We would have funded it only from these SIPs. And when you're retired, call me for a drink in your retirement. We would have funded it only from these SIPs.
Sure, sir.
And stay focused on these things, because only these things matter in life, not markets.
SIPs and mutual fund, right, sir?
That's it.
Okay, sir. Thank you, sir. Thank you so much.
Moving on to Chetan. Yeah, Chetan, you can unmute. Chetan, you have some question? Yeah.
Yeah, it's sorry, I'm audible?
Yeah, you're audible, Chetan.
Yeah. It's just a basic query related to the earlier question the guy asked. So I am also investing in the mutual fund and as well as in PPF also. So is it preferable to go in the mutual fund over the PPF? That I just want to understand. Because as per the slab, I am totally investing 1.5 lakh in PPF. So
Chetan, are you a vegetarian or a non-vegetarian?
Non-vegetarian.
Chicken khate ho?
हाँ, yes, sir.
मटन खाते हो?
हाँ, खाता हूँ.
Now let me ask you the difficult question. Which is better of the two? अरे भाई
I
दोनों ही
think
अच्छे हैं. You
दोनों ही
know,
अच्छे. Yes.
correct? Right?
Yeah, yeah.
One preparation is good in chicken, one preparation is good in mutton. दोनों ही अच्छे हैं. That's the
Yes.
point I'm trying to make. Okay, PPF, is it good? It's good. Of course, it's a great debt investment and it's a great tax saving way and it's a great compounder because you put money for 15 years. The
Yeah,
two
yeah.
problems with is that you can only do 1,50,000 a year. Okay.
Yeah,
उसके
yeah.
बाद क्या? उसके बाद, and if you're a young guy, you need an asset class that will compound greater than 8%. That's my point. Because
Yeah.
your lifestyle inflation will compound greater than 8%. And that is why you need to do equities. So if I can afford 3 lakhs a year, which is 25,000 a month, I'd say, okay,
Yeah.
1.5 lakhs PPF, 1.5 lakhs mutual funds through SIPs every month. If I can invest 10 lakhs a year, I'd still do 1.5 lakhs in PPF and 8.5 lakhs in mutual funds because I'm assuming you are young, you've got those dreams and aspirations. You need an
Yeah.
asset class that will grow with time.
Okay. Only from the point of view that considering the returns of the PPF, which is approximately 7.5, and compared to mutual fund, it's on an average, we can say some 12%. So I was just
Give it
thinking
the
mutual
same
fund.
period of time. Yes, you are absolutely right. PPF you get over 15 years. Don't forget that part. Okay.
Yeah.
Will equity markets give you 12%? Is there a guarantee to that? The answer is no. But is it a reasonable expectation from a country like India? The answer is an emphatic yes.
Okay. Okay.
And that's why you need to do it that way. Yep.
So again, asset allocation is the mantra, Chetan, what sir is trying to, focus on. And that's what Bessie is saying. Put money into different asset class. Don't just put into one. Don't get mesmerized by the returns. Equity may 12 aata hai, 15 aata hai, let everything put into equity. No, it's like, diversify and put it into different asset class.
Yeah.
Okay.
Yeah.
Shudipta has one question. Bessie, it's really very interesting. When we invest in mutual funds, sometimes, it tends to underperform continuously. So we need to switch it to a better fund and then the cycle continues. So shall we continue in the underperforming funds or how exactly? And if we have to continue, let's say that's also my question. कितना time देना चाहिए एक fund को that, okay, now if it is continuously underperforming, you should not sit on top of it. Let's, move to some other fund and start the SIP in that fund. Some certain funds have their good and the bad phases.
Oh, absolutely. So I would say you need to, and that's where the role of sort of yourself comes more into play than an investor, because I would believe the investor may not have that level of access to information and knowledge that's required. So you have to see the pedigree of the fund house. You have to see the longevity of the team that has been there managing the funds. You have to see and introspect on what are the other funds of that same fund house doing. So is it a problem with this particular fund, or is it a problem with all the funds in terms of their larger processes that they apply? You have to then introspect on, is there a change in fund managers that has repeatedly happened causing this drag? Finally, you have to look at also the portfolio and analyze what is the attribution analysis of saying, okay, by what is he holding, which really has not worked. Are these good companies? And all fund managers have gone, all of them have gone through good phases and terrible phases, and they also have. So there are fund managers that I invest with, and they've had terrible times of 5 and 7 years. But I've continued my SIPs over there because every once or twice a year, if I open the fact sheet and I read the portfolio and I say, okay, this man has a philosophy, style of investing, and thought process of picking up which kind of stocks. I like that it is a different style, and that's why this part of the portfolio is underperforming when everything else is. I don't mind that. But if you find too much churn in a portfolio, you find portfolio turnover ratios very, very high, you find fund managers have kept changing, then I'd worry immensely and I'd say you need to change.
Like I'll have one question, like I just got it on the WhatsApp. Like, sometimes people have question on the MNC fund. Like the quality of the company, everything is good, but still, from last 5-7 years, it has not been able to it has been underperforming. So would you consider this as a sectoral allocation, or how would you, advise them to maybe switch to a normal flexi cap fund, let's say from an MNC, because they will have a flavor of both?
So most sectoral funds, firstly, are at the highest risk spectrum. So
Yes.
please understand, when we say that, when we put out the chart which says okay, lowest risk within equity funds, lowest risk to highest risk, sectoral funds sit at the highest risk level. That's point number one. When you say you are carrying highest risk and you didn't get returns for 5 years, that's exactly what it was meant to tell you, that boss, it is a risky asset in a risky asset class. Okay. Sectors normally have cycles which are long drawn and played out. Returns from sectors come in bursts. When they come, they give you so much return, okay, that it will compensate for the 5 or 7 years of non-performance. The question comes is that, first, when did you enter that? If you entered after returns because you got attracted by returns, which means that you have to now wait for another 5-7 years for that whole cycle to play out for yourself. Let me give you an example. Look at auto sector in India. Okay, it has been butchered and battered in time. Pre-COVID, there was series of regulatory changes, Bharat 2 to Bharat BS3, BS3 to BS4, BS4 to straight BS6. Okay. So in India today, there cannot be any car without 2 airbags. Okay. Then came COVID, there was demand destruction. When COVID finished, there is a supply side problem because there is no chips that are available. Okay. That sector has been battered for 5 years. It has, in the last 5 years, done half of what the Nifty has done. Now, if I told you buy this sector, you will say, अरे रिटर्न इतना खराब है. अरे बट भाई क्योंकि खराब है इसके लिए खरीदो, क्योंकि हर कुत्ते का दिन आएगा. ये सेक्टर, pardon the language, but ये सेक्टर का भी टाइम आएगा. And when it will come, it will give you so much return. If you came after that return got delivered, my God, you have to wait for another 7-8 year cycle before that sector will play out for you. So watch carefully. Finally, Saurabh, it again comes back to same asset allocation. Would I have sectoral funds in my portfolio? Like I spoke earlier, I have sectoral funds in my portfolio. Okay, it's smaller part of my portfolio, but I like the excitement of sectoral funds. I want them there.
Perfect. Aditi has one question. Aditi, please go ahead.
Yeah, this is Pradeep here. I'm using just my daughter's ID. Yeah.
Okay.
So thanks, Saurabh. Thanks so much for organizing this. And Mr. Prissy, thank you so much for the presentation. I think it was so simple without using any financial jargons, no P, alpha, beta, very nicely explained. Thank you so much. My question is, see, I'm 46 years old. And as you were saying, investment through SIP, through mutual fund is the best way. My question is, how do you select between what's a better choice, going through mutual fund or through PMS? These days there are a lot of PMS like Marcellus, Sage One, or White Oaks. So, what do you suggest for the people?
Again, I'll go back to my funda of saying asset allocation. Okay. Now, firstly, do understand that when you are buying PMS or you're buying equity, underlying you are buying equity as an asset class.
True, yeah.
Okay. So first of all, what are you buying? You're not buying PMS or mutual fund, you're buying equity.
True.
The vehicle is PMS. PMS is a tighter portfolio. Okay. It will have 10, 15, 20 stocks, 25 stocks. Mutual fund is a far more diversified portfolio. Okay. Typically, funds will have between 50 and sometimes even 75, 80 stocks. Okay. So you're buying a far more diversified way of participating in equity. Should you have PMS in your portfolio? The answer is probably yes. If you want some part of your portfolio to have an aggressive outlook in investing to equities, buy a good PMS. The only problem with PMS is that it takes away a large chunk of your money because the minimum investment amount is high. In a mutual fund, you can start with 5,000 rupees. But there, I think you will have to start with 25 lakhs. If it is an AIF, you have to start with 1 crore of rupees. Okay. And that's where it starts worrying you. Because if you had a portfolio of 5 crores and there you put 1 or 2 PMSs of 25 lakh tickets, it may not worry you. But if you are an investor who's got 1 crore of financial investments in which you chose one PMS of 25 lakhs, high risk way of entering an risky asset class, you will start worrying. Again, I come back to the simple points of saying everything is good, but is it good for you? Be selfish and think of it in that way, not by what return. In a bull market, in a market that has done extremely well, a concentrated portfolio will always outperform a diversified portfolio.
True, yeah.
So therefore, if last 2, 3, 4 years, despite the pandemic has been good for markets, PMS will outperform mutual funds. But you have to look at it from longer cycles and say, equity is what I want to buy. Do I have the ability to put such large money in such a concentrated way of accessing? If the answer is yes, please do it.
Perfect.
Thanks, Lucy. Thank you.
Yeah, Rahul has one question. Which sectors would you recommend, let's say, for next 5, 10 years, considering the sectoral fund based upon your experience? That's it.
So, now I'm going to stick my neck out here and against my own fundamental principles of saying, forget sectors, buy equities. I'd still say that, there are certain sectors like the example that I gave of auto, okay, that have hugely underperformed for a reasonably long period of time. In a market where you are worried about it being expensive, in an outlook where you are worried about high inflation, rising interest rates, I would be very wary to buy any sector which is already trading at 50, 60, 70 times PE multiples. I'd like to buy the contrary. Because, and mind you, again, I will repeat, don't expect that because I bought the contrary, it should start performing today. The expectation that I would carry is that when the general environment is more conducive, this will outperform the broad markets. It's not that it is going to give me returns today. It's when things are looking generally good, an undervalued sector should outperform the broad markets.
Perfect. As you rightly said, because last year everybody saw the return of IT companies and they saw the pharma and people invested. And now because of the correction which has happened, probably they have to wait for a prolonged period of time. And as you rightly hinted, auto has its worst. So probably maybe, one can start looking at investing in maybe auto or banks, which are comparatively available at a cheaper as compared to the other sectors. Perfect. Gaurav has one question that, sometimes you have lump sum money. So how do it's very difficult to invest and, in terms of timing the market, how you should invest. And sometimes I also get this question like, now I have 2 lakhs, 3 lakhs or 5 lakhs of money. Do I top up now? Should I wait or how should I do it? So how, one should use that additional sum could be, most of the people have got bonuses now. So they want to put some amount of the bonus into equity. So how they should allocate?
So great question. And again, I'll give you only my personal example. Because I worked for the last 28 years and typically I worked in companies that give annual bonuses or quarterly incentives, what I've always landed up doing is along with my monthly SIPs, every time bonuses come, first I have to go and finish off what my wife's wants are. Okay. But along with that, I take that money and I do an STP because I just cannot time the market. And when markets are generally expensive, okay, I most definitely will do an. So if I get a bonus every year in April, I'll say अच्छा भाई अगले साल भी अप्रैल में आएगा ना, तो ये अप्रैल में जो आया है 12 महीने की एसटीपी लिक्विड फंड में डाल देता हूँ. ये फंड्स में मुझे पैसा डालना है. Over a 12-month period, this money will keep getting shifted into equity. Next April, जब वापस bonus आएगा, I'll take a look. तब तक market is corrected or whatever. If the market generally looks reasonably cheap, I will put it in one go. Okay. Now, what is reasonably cheap? Look at April 21, extremely cheap. Okay. I would not waste my 1 minute of time in investing in such a market. Today, broadly, if I had to say, are we extremely cheap? The answer is an emphatic no. Are we relatively cheap? The answer is probably no. Are we still fully priced? The answer is yes, but I'm buying future growth. But still in that, मुझे लगता है कि कोई जल्दी नहीं है. मैं आज या 3 महीने के बाद भी इन्वेस्ट करूंगा तो चलेगा, but I cannot time it. So I will do an STP in a market environment like this.
Perfect. Fair point. So if you find that markets are really corrected a lot, so it's time to go one way. You can take that amount of risk and you can put lump sum. But maybe still at current situation, we are still confused that, whether it will fall further, go up, or how exactly it is. So you can do and invest in an STP format. Perfect. Nikesh has one question. Nikesh, yeah, please go ahead.
Sorry, Saurabh, if I may make a request, it's 11:17.
Yeah,
I'll
just
have to,
2 more questions. Okay.
yeah, I'll have to at the outside cut off by 11:25.
Sure.
Yeah,
We'll just have 2 or 3 more questions. That's it. Yeah,
surely,
Nikesh,
surely.
please
Yeah,
go
yeah.
ahead fast.
Yeah, sorry. So my question is a bit towards investment and prepayment. So it's just simple that if we get an extra money, should we think of paying it in the liability or should we do it in the investment? So
Great question, Nikesh. Super question, and that's been the story of my life, all my life, because I've always had an EMI and a housing loan, and I have one, although it's very small now, but I still have one even today. Okay. The answer to that question is you need to do both. Okay. Again, and I'll repeat. And it's a classical error in life that I did for a long period of time. Okay. And the error I did was I kept repaying my liabilities and giving up. So my liability typically had been around 7, 8, 9% because that's been the cost of my housing loan. Okay. Equity markets over the last 28 years, and for the last 28 years I've had a housing loan because एक bedroom से 2 bedroom गया, 2 bedroom से 4 bedroom में गया, तो हमेशा हाउसिंग लोन मेरी जिंदगी के साथ, जब से बीवी आई तब से हाउसिंग लोन आया. ओके. आज भी वही बीवी है और आज भी हाउसिंग लोन है. But what I realized in 28 years is that the markets gave a return far greater than the cost of my housing loan. And every time that I took big chunks of money and I repaid the housing loan, I lost an opportunity to make money in the markets. Okay. And I'm not even considering the value of the house, how much it's gone up by or gone down by. I just didn't give enough money to participate in a potential of greater growth. So I would say, again, be selfish. What gives you some level of comfort? No, please go and retire your liability. Okay. But don't do it to an extent where you kill the potential of you making returns in the long term. Your EMI is long term. Investments are also long term. Prepay to give yourself some comfort. Don't prepay at the cost of killing investment potential for yourself.
Perfect. I think right.
thank you, sir.
So Mehul, I'll just take another 2 questions. One from Mehul: is investing in ETFs like Nifty Bs as are comparable investments as mutual funds? It's like whether we should invest in ETF or MF, like how exactly it is.
I would say again, ETFs are nothing but a replication of an underlying. So if I say I want to buy, oh, forget this fund manager and all, वो क्या लेगा क्या नहीं लेगा मुझे नहीं पता है, मुझे सिर्फ market चाहिए, then buy the ETF. It's a great way to invest. ETFs have also innovated, by the way. So there are ways to capture certain parts of the market which a normal fund manager may not be focusing on. So let me give an example. We have a fund which invests, it's not an ETF, it's an index fund, but it doesn't matter. It's the same principle to apply in momentum based stocks. So आप किसी को पूछोगे बोलेगा I am a fundamental research bottom up stock picker and that's how I build my portfolio. Momentum के आधार पे बहुत कम investment options मिलेंगे आपको. People will normally only do stocks. So you will get to buy an index fund, which is again like an ETF, which will allow you to participate. So look for ETF if you are starting your investment journey. Look for ETF if you're looking for some very specialized ideas. Okay. A bulk of your money in a country like India should continue to go into actively managed funds.
Perfect. Manoj, one last question from you. Yeah, and then we'll allow Pessi sir to leave. Yeah, Manoj.
Yeah, thanks Saurabh for organizing this session. My question is that, Pessi, as you are in Pessis for the mutual fund, suppose I am planning to investment in mutual fund of the 20,000 per month. So should I opt in one mutual fund only, or I have to opt in a 2-3 fund in the range of the 8,000 each mutual fund? Means I should invest 24,000 in one mutual fund, or it could be divided in
No,
2-3
I
mutual
would
funds?
definitely say you need to divide it. Okay. You need to divide it at two levels. One is across mutual fund houses. So I work with UTI mutual fund. When you're investing, Manojji, please invest some money with UTI also. But should you invest all your 20,000 with UTI? I myself will tell you, no, please don't do that. You need to diversify across a fund house. You need to diversify across large cap, mid cap, small cap. Okay. So if I was you, I'd probably say, okay, I'd go. Firstly, I'd never do it myself. I'd go to Saurabh as an advisor and say, Saurabh, मेरे पास 20,000 रुपया है. मुझे ये तीन get me a fund house that works very well in mid caps, somebody who does very good job of small caps, somebody who does a reasonably good job of flexi cap or large caps, and take my money and break it into 3 different fund houses and 3 different market capitalization. That's the mandate I would give Saurabh, and then I'd let him choose for me, because I don't have the expertise to do it myself. That's all.
Okay. Thanks for input. We'll connect with Saurabh for that.
Please.
Saurabh, I think you are in mute.
Yeah, great. Thank you all, for asking such wonderful questions. And I think most of the questions have got answered. And again, once the session really becomes interactive, the speaker also enjoys in terms of answering the question. And on that note, I would sincerely like to thank Pessi, for coming, taking your time out and extending your time for another 25 minutes to address the query. Really, super thank you to you for addressing that session, addressing the queries, and I would say enlightening, motivating all of us to stay focused towards their goal rather than chasing the return. One should chase their goals, chase their aspiration, and just do simple asset allocation and follow simple investing mantras. Thank you, sir. Thanks a lot.
My absolute pleasure, and thank you for being such a great audience. I thoroughly enjoyed this session for the fact that the questions were superb, and nobody came and asked me at the end of the session कि sir market क्या लगता है, ऊपर जाएगा कि नीचे जाएगा, because मुझे पता नहीं है, सौरभ को पता नहीं है, आपको पता नहीं है. So I'll close by going back to where I started. Be selfish, invest for yourself, and you will not fail financially. Thank you very much. Please have a great weekend, and do continue to take good care of yourself. COVID is back on the rise, but we need to be continuing to stay safe and cautious. Thanks, Saurabh. Thanks for organizing this. Take care. Bye-bye.
Thank you, sir. Thank you. Thank you all,
Thank you
friends,
so
for
much.
being here. And thank you for taking your time out and attending those sessions. In between, we stopped this for 1 or 2 months, but now I think we'll continue once in every month. We'll keep inviting some of the industry experts so that we also keep learning, keep motivating ourselves, and spread this knowledge with our friends, communities, etc., so that they can also become a part of this entire wealth creation journey exercise, whatever we are into it. Thank you all. Thank you. Yeah.
Thank you, Saurabh.
Thank you, guys.
Thank you. Thank you.
Thank you.
Thank you. Anything you wanted to ask me? Anything particular? Maybe we can talk now because Pessi has to leave. Yeah. Anything? Great. Thank you. Thank you all for being.
Thank you very much.
Thank you. Thanks a lot, sir. Thank you for your comments.
Great recording, na?
Yeah. I'll share the recording.
Good morning,
it's also,
sir.
Yeah. It's also live on YouTube, so I'll share the link.
Thank you so much, sir. Because I just joined in half day.
Okay, Karan, I'll share the recording with you. Thank you, Karan.
Yeah,
Thank
Saurabh,
you.
Thank you so much, sir. Yeah.
Thank you.
yeah,
Excellent, excellent. Yes,
please
sir.
share the recording.
I
Would like-
enjoy here. Yeah, yeah.
Great.
What the sir make mistake, the same mistake I also made in first house.
We always learn.
I
from,
also
doing
repay
mistakes.
5 lakhs at the same time, and then now I'm thinking like at that time I would have been taken TCS. Then TCS is more not 10 times, but it is now 30 times or 40 times.
Perfect. नहीं, ठीक है, sir. Everybody learns. We also learn. That's it.
Yes,
So
sir.
great,
Yes, sir.
great.
Yeah. Thank you, sir. Thank you so much, sir.
Thank you. Thank you all. I'm just closing the session. Yeah. Thank you.
Thanks.